Good morning. Hopefully you guys can hear me all right. Welcome back to The Daily Grind. I'm your host, Chump Change. This is live and recorded. For those of you guys that might not know, what we do here is we go over crypto news and news in general in the space. I update myself, bring you guys along for the ride. Let's see who's in the house and we'll get into this. You guys can tell I am remote and I'm streaming in a kind of an echoey room, so I apologize for that. Let's see who's in the house though. Steven Cicero, what's up, man? Leo Lustig, good to see you. I think I got the buttons fixed, by the way. It might be a little bit loud, but they work. All right, let's see. 10 minutes to midnight. Dakota Miner, what's up? Miss Pocket Change, good morning. Yeah, I did have daddy duty. My kid decided to drop one right before I went live, so I had to go take care of the business, you know what I mean? DDA40, what's up, man? Good to see you. We have Lawnmower Man, I think I already said that. Sasquatch Crap, what's up, dude? Good to see you. Black Hat Team. Steven Cicero, good morning, sir. Good morning. Iguana Bites, good to see you. Everybody else, I may have missed. I apologize. Let's get into it. All right, Bitcoin, $93,527 as of right now. Ethereum at 3,000. If the music is too loud, let me know. I feel like it might be. I'm not sure. I can't really tell, to be honest. But let me know if it is or not, if any of my levels are messed up. ADA, look at this, up 8% on the day. We get 81 cents over here. XRP still holding over $1.12 to be exact. Kaspa sold the news after listing on the Tier 1 exchange. Kraken, crazy. Over here, 15 cents, 15.6 to be exact, right? A little over 15 and a half. Bitcoin did hit 94,000 though yesterday, which is pretty crazy, right? 93.5. It's inevitable we get to 100K sooner than later. Solana, 236 bucks. We have Sui, $3.64. Doge over here at 38 cents. ETC's at $25. We have, let's see, nothing else really jumping out at. I mean, LTC, 85 bucks, 85 and a half. This peanut token is down 5% today, almost 6% to $1.56, if anybody's into that. Let's see, Leo is up to $8.47. Let me see, let me know if my audio is good. Why are you in the kids' echo room? Because this room is the only good place to stream and it's nice and cool in here, to be honest. I tried to go outside and it's like straight swamp ass. Can't do it. It was bad. Let me see, hold on, why is this all messed up? Oh, there we go. All right, sorry, had to fix that. Crow, 17, almost 18 cents, up 6% on the day. Nice, let's go to Crypto Bubble, see what we got over here. We got H-Bar down 13%. Kaspa, 11.7% down on the day. Terrible. ADA, 8.7% rather, sorry. It's at 81 cents, 81 and a half. Yeah, everything's just kind of whatever. A little bit of a pullback day, to be honest, all around. Not too bad. Could be worse, right? Let's check out the week, though. On the week, H-Bar's up over 119%. Damn. Over here, this is Mantra, up 171%. Crazy, $3.86. That is nuts. Absolutely nuts. Audio's okay. A little echo, but okay, yeah. Yeah, it's this room. Unfortunately, there's nothing I can do about it. It's a good slide, though. It's pretty cool pictures on the wall. Pretty neat. You guys know I'm obviously not at my normal location. All right, flashbang over here. Fear and Greed Index is at an 83. We had Extreme Greed yesterday, which is at a 90. Again, this is like this is the best like indicator to know when things are gonna have a little bit of a pullback. When the Extreme Greed gets you and it's super high, like in the 90s, we're gonna have a pullback, you know, within like a day or two. That's pretty much what I've noticed on this, and that's why under 75 I'm happy and I think things are gonna pump easy. But once it's over 75, I think it's kind of it's no man's land for what's gonna happen next, right? But jumping up to 90, that was definitely kind of a red flag. We're gonna have a pullback, right? All right, top 10 coins by coin market cap over on CoinGecko, starting with Bitcoin at a $1.849 trillion market cap. We got Ethereum in second, Tether, Solana, BNB, XRP, Dogecoin, USDC, Lido Staked Ether, and Cardano still in 10th place. Cardano has a $29 billion market cap. That is crazy. That's crazy. That's giant, actually. Tron's in 11th place over here at 17 billion. Shiba's at a 14 billion in 12th place. Crazy. Where is Kaspa? Where's Kaspa landing? We are at a $4 billion market cap still. Still at $4 billion. and we did get a tier 1 exchange. To be honest, Kraken, I like Kraken, don't get me wrong, but if it was Coinbase, I think it would have had a different result. That's just my opinion, but Coinbase is one of those exchanges that if you don't pay to get on it, unless they're gonna make a killing, they ain't gonna pay you. Like, they ain't gonna fork up the money for you to get on it. So that's kind of Kaspa being a fair launch. Nobody paying to get on exchanges is what really hurts this project. But it's, I mean, I get it, is what it is. We'll see what happens. It is still like the best technology on the planet when it comes to like a payment system, besides Bitcoin, obviously, right? It's just a faster, more developed algorithm. All right, let's see. Yeah, nothing really else jumping out at me that I want to look at over here. Jump on to the mining segment of things. Let's see what we got over here. What are the most profitable miners of the day? Yeah, don't forget to smash the like button. Thanks, Mr. 10 minutes to midnight. Appreciate you. All right, Antminer L9 over here, $35 a day. 17 gigahash unit, the 16 gigahash unit. L9 is making $33.09. Man, we got some new Litecoin miners coming out soon too, by the way. I can't spill any beans, but there's gonna be some new ones that are pretty damn efficient, to be honest. All right, looking over here, we got the L7, my 9050. You guys know I got this thing down at Terra Hosting. Shout out to them. If you guys are interested in hosting, link is down in the description. But my 9050 is still making $15 a day. It's amazing, absolutely amazing. 3-year-old machine. 85% of that's in Dogecoin, but it's still awesome. All right, let's see. What do we want to look at? Bitcoin miners. S21 Pro over here, 234 terahash unit, making $3.30 a day. Again, this is at 10 cents per kilowatt hour. I just want to see where the Bitcoin miners are at. Where's my S19K? S19K Pro. Dude, we have a $93,000, almost $94,000 Bitcoin. And my S19K Pro 120 terahash unit is still losing 59 cents a day at 10 cents per kilowatt hour. That is miserable. That is miserable. Dan R, good morning. Good morning. Man, that's awful. How are we still that bad? That's crazy. Difficulty must be insane. All right, moving on. Let me see. GPUs, what do we got? Top coin over here to mine for GPUs. Man, this is like laggy as hell. Holy hell. Dude, I'm not using Brave browser and look at all the ads. Look at all the ads on this. Man, they're like glitching out the site. That's crazy. Ergo on the 170HX, look at that. Aleo as well. Top of the charts pretty much on everything. Ergo and Pyron, I'm still shocked Pyron's even around. Ravencoin on the 6800 XT. Let me see, what's Lithium doing real quick? Just because I haven't looked at Lithium in a while. 14%, nice. $1.37, look at that. Some more profits for you guys in the lithium miners. Nice, could be worse. Could be worse. Obviously these charts are ass, I'm just kind of seeing where things are. Let's go to Aleo though. I know you guys are into this one. Some of you GPU miners, $1.20 right now. Man, so we're going down to 24. 7 days kind of chugging along. 1 month. Yeah, people selling off, taking profits, I get it. It is what it is. Could be worse. Could always be worse. What was the other? Ergo. Ergo. What's Ergo looking like? 11.78%. Nice. $1.46. Anybody bullish on Ergo? I think Ergo is just kind of, I don't know. It's there. I guess it's going to do well, but we're going to have to see. It's already done the 3x. Nice. Or 2, a little over 2x rather. A little over 2x from a month ago, not even. 16 days ago. November 4th, it was at 62 cents. Damn. Not bullish on Ergo, no. I've been on Flux the last couple weeks. Flux, how's Flux doing? You know what one's really disappointing, and it sucks to say, but Dynex has really not moved much. 55 cents. Flux has been doing really shitty too. It's really been doing pretty shitty. But it could always be worse. Can always be worse. Let's see. If you guys have any questions, just add me in the chat. Is anyone is on BTC? It's going through. Oh, you were talking about the non-financial advisor. You're talking about the ETF on Bitcoin? Is that what that symbol means? I assume. You put the money sign for it. I think it's like the stock version of it, right? ETF. So let me know if that's what you're talking about. But no, I'm not into the ETFs. I just buy Bitcoin by itself. Let's see. Yeah, I mean, it's really nothing else jumping on at me. How's Ravencoin doing? Look at Ravencoin, looking at the news. Do have to get out of here in a little bit, but we're gonna watch a bunch of things before we do so. 4.67% down on the day, 2 cents. 2 cents. I think they just had the Ravencoin cruise, right? Or BBT's on it right now, if I'm not mistaken. I mean, it's been rising since the 3rd of November. It was at $0.015. But Ravencoin's just, I don't know. It's one of those projects that are kind of just there. 2021, it did run up, right? To what? What's the all-time high actually? 28 cents it says I got to? Jesus. I don't know. I don't have high hopes for it, but you guys, let me know in the chat if you do. Yeah, I don't know. I think it's past its time. This is my opinion. All right, let me kill this music. We're gonna watch some stuff. Let's get into the news. I wanna see what we got over here. We'll remain in the Goldilocks zone a little bit more. Says Universa Investments, Mark something. Yeah, let's do it.
Russian President Vladimir Putin formally lowered the threshold for his country's use of nuclear weapons. Joining us now on the markets, Mark Spitznagel, founder and chief investment officer of the hedge fund Universa Investments, has more than $17 billion in assets under management. And one of the things, and it's good to have you on, great to have you in. You do deal in the possibility of black swan events. I guess, so we ratcheted it up a little bit this morning, or not to worry?
I mean, we don't really look to short-term, fluctuations too much, but I do think we're at a time that we need to start to worry a little bit. It's been a little uncharacteristic. I've been a lot more bullish over the last 2 years because I think we're sort of in this Goldilocks zone right now. I kind of feel like we'll remain in it a little bit more. I think we're going to look for a little more euphoria. But I think that we're still part of this boom-bust cycle, and I think that that's kind of an inevitable thing that we're in.
But next year, maybe not so much.
Yeah, exactly. I mean, I think we have to, lag effects are important in this business, and I think it's easy for us to forget that, and it's kind of the reason, lag effects are the reason Bernanke, for instance, got so blindsided at the GFC. And what Goldilocks zones are the sort of when you're in this immediate effect, positive environment, and the sort of overlapping lag effects that are kind of coming. So I think that's where we are right now.
Go ahead.
The boom and bust effects, is that ever since the COVID pandemic when things went down, or are you talking about broader boom and bust?
Definitely broader. I mean, I think that ultimately boom and bust cycles are caused by monetary policy. And, we can't put the genie back in the bottle from what really started at the GFC. I really think that's what's driving everything ultimately.
All the other things that we talked about won't be what gets us, though. It'll be another mistake in monetary policy, in your view?
Yeah, so I mean, I think that, I think that ultimately what happened in 22, I thought that was an enormous mistake. People thought that, we were in the 70s, that was kind of their investment thesis, and I thought that was just profoundly wrong, simply because of the levered, we have the largest credit bubble, I would argue, in human history, and you can't just tighten into that. I don't think we're ever going to see another truly run-of-the-mill sort of, business cycle again. So yeah, that was a mistake. But of course, the real mistake was what happened, 15 years earlier today. So yeah, I mean, ultimately, I think these are the problems. These are the mistakes that have happened. I think truly the Fed is behind the curve right now. Even though I hate looking like a Fed apologist. You'll never find someone who's more anti-Fed. I mean, and the Fed would be something that I would be in favor of. You'll never find a more negative person on the Fed than myself.
Who should be controlling monetary policy if it's not the Fed, not the president, I guess, do you think? I mean, how should we do it? Because there are people that point out, we haven't always had the Fed. And there are those that it's almost a religion, Fed independence. But you're just giving, there's a lot of people who can screw up monetary policy. It could be the Fed, could be the president, could be Congress. Is this the best way to do it, or should it be rule-based?
To me, I'm more of a purist on this. I think it sort of begs the question, well, why should there be monetary policy? Yeah. We all agree in free markets, free market price discovery of things. Why shouldn't that be the case for interest rates as well? I think we kind of need to figure that out first. Yeah, I think we're better off. When we set interest rates, why should a bureaucracy, a bureaucrat in Washington, tell us what interest rates should be? It creates distortions in the market, ultimately.
Right. But then there's times where we thank the Fed for saving our bacon, right? No?
Well, of course, that's the thing. But then it creates these other problems. It creates moral hazard. We know all these. We know all these problems. And the other thing is, this is typical of government policy. The effects tend to come later. So we create these sort of Pyrrhic victories, and it's easy to forget who caused the real problems. This is really what governments do.
Interesting. I was reading the chat. Mr. Leo Lustig, yeah. Zelcor is, I've never liked Zelcor. I don't know. Not for me. But there's been a lot of people getting hacked on their Zelcors somehow, some way. I don't know why, I don't know how. But you guys, please be careful. Make sure you check your wallets. Make sure you guys use two-factor authentication. Make sure you guys don't link stuff on your everyday computer, please. It's use a strong password, things like that. But yeah, I would highly recommend getting all of your money into a hardware wallet like Tangem or something. Even if you don't want to use Tangem, I mean, that's my favorite wallet, but you guys do what you want. Links in the pinned comment if you guys are interested in that. But unfortunately, some coins you can't get on Tangem, like Flux and stuff, so it's kind of tough. But yeah, I don't know. It is what it is. Unfortunately, just be safe. Don't put all your money in one spot. We believe the market is going higher into the end of the year. Let's see what they got to say over here. Again, CNBC Television.
Let's begin with the markets and whether these recent dips present an opportunity for your portfolio. Our next guest does see some more record highs going into year-end, telling investors to start buying into some of these pullbacks. Joining us here at Post 9 is UBS Global Wealth Senior Portfolio Manager Alan Rechtschaffen. Alan, welcome back. Good
Thanks,
to see
Carl.
you.
Great to see you.
So do you nibble now? Do you wait for a bigger decline? What's the appetite like?
Look, the big story is obviously the President of the United States. And we have a new president. We have a new administration that's very focused on structural changes. So any time ahead of those implementations seems like a time to deploy more capital. We believe that the market's going higher by the end of the year. Maybe we'll touch the highs that we had immediately after Election Day. But what's more important here is that we have structural changes on the horizon. The talk yesterday about the appointment of Kevin Warsh as Secretary of the Treasury. These are ideas that show that this administration's focused on working through the debt problems, the ideas that there is structural issues in the United States that can be handled and can be profited from.
Structural challenges like
the debt, $29 trillion in debt,
right.
The Fed's balance sheet going from $1 trillion to $9 trillion down to $7 trillion now. All these things are things that are directly in the line of sight for this administration. And you see that from DOGE, the Department of Government Efficiency. You see that this is an administration that's focused on fixing some of the structural issues, not just dealing with playing whack-a-mole.
Do you think the long end of the bond market is appreciating that effort?
Well, you've seen the long end of the market rise. Since September, we've risen something like 70 basis points. And I think that we have a problem of inflation that has to be dealt with, and that's something that the Fed is trying to deal with. The Fed is on a course. We believe that the Fed's going to lower rates again in December, although it's 50-50 according to the market. We think the Fed's going to lower interest rates by 25 basis points. Next year, we see them lowering as much as 100, but we do have a big change in focus from the Biden administration to Trump 2.0.
More pro-growth.
More pro-growth, less regulation, the idea of fiscal responsibility.
Right, more growth, but the Fed's going to cut another whole point?
So we see that given the data that we have right now, where the Fed is right now on the track that they are on right now, that is the plan. This could change depending on who the Treasury Secretary is, what happens in terms of the Fed's reaction to the fiscal realities of what's going on.
So fiscal discipline is something that I'm not sure the market knows how to price right now. And ultimately, doesn't that hurt growth when you see big spending cuts?
Well, I think at the end of the day, having a lot of debt is not good. It doesn't feel good personally. It doesn't feel good for the United States. And we haven't had an administration that's really been focused on changing that. With the discussions...
No, it might be all good, but is it good for the equity market?
Yeah, I think ultimately it will be good for the equity markets because we have to put ourselves in a position where our country is on a secure framework. You've seen the rise in gold, the rise in cryptocurrencies. All this foretells a real challenge for the dollar. And that's something that the Trump administration is very much focused on. That the dollar has to remain the reserve currency, which inures to huge benefits for corporations.
Don't you want to then avoid, as far as equities go, anything that has a touch with government contracts or government spend?
Well, it depends. If those government contracts will be beneficial if you have a less regulatory environment, then I think that this is a key time to be invested in those companies. You look at structural changes in the utility industry, what's going to happen with nuclear. You look at artificial intelligence and technology. You have huge PE ratios on technology. Maybe they're justified when you have a world that's totally changing. I mean, I'm sure that you've experienced on your own, you playing with AI, but it's more than just playing with AI. It is going to change the way everything is done.
Are you not afraid of the tariffs?
I think that the Fed has demonstrated that they see through the tariffs, and I'm going to defer to their ability to assess it. If you look at the rhetoric about the tariffs versus what Trump implemented in Trump 1.0, there is a schism between the two, between what Trump may actually do and what he's talked about. But I think that Trump is trying to handle a structural issue that the United States has been at a disadvantage, and he's trying to handle that through tariffs, which reasonable minds can debate whether that will be effective or not.
So all of this.
Through the threat of tariffs. That's what it is. It's not, I really don't think he's going to implement some crazy ass tariffs. I think he's going to threaten people with it. And if they don't want to abide by the guidelines to get their shit into the U.S., then, yeah, eat shit.
I mean, paints a really good picture, and it makes you feel bullish. I guess one question would be, how much exposure do you add at this point where we've already seen such a dramatic rally?
Yeah, so when we're overweight equities, and I would still be overweight equities going into 2025. Once more, I think we're going to see a record high again by the end of the year. We've had 50 this year so far. Maybe we won't get a 50 first, but we'll be up towards record highs again. If these structural changes are in place, if we can have a fiscally responsible House, depending on who the Treasury Secretary is, depending on how the Federal Reserve reacts, and we see this structural changes in terms of utilities, technology, and the way interest rates flow, if interest rates bring inflation under control, yes, I think that we should be deploying more capital to the equity markets, and we can be very confident going into 2025.
That's one reason why this Treasury appointment, our nominee announcement, will be so key for markets, and we're still waiting on that.
Yeah, and I think that the notion of a Kevin Warsh Treasury is incredibly interesting because he's somebody who served in the Bernanke administration. He's somebody who's been a fiscal responsible person and is also a well-known quantity to Wall Street. And I think that is particularly helpful because you see this administration that's not only looking to make structural changes, but is looking to do it in a prudent way, whether Kevin Warsh gets the job or not. It demonstrates the focus of this president.
Yeah, for sure. Alan, thanks. Good to see you.
It's great to see you,
kicking
Carl.
off the hour.
Thank you.
Let's begin with the markets and whether these recent dips.
What the hell? That just like changed. All right, Robinhood to acquire Trade PMR for $300 million.
Platform Trade PMR. Let's get to Kate Rooney in San Francisco. She's got an exclusive interview for us. Take it away, Kate.
Hey there, Courtney. Yeah, thanks so much. And we've got Vlad Tenev here, co-founder, CEO of Robinhood. Rob Baldwin as well, CEO of Trade PMR. Big deal today for you guys. I want to start with you, Vlad. So $300 million. What's the strategic rationale behind this? And I was wondering, like, do younger investors actually want a human advisor? That might surprise people. As you guys are tech forward, we think of AI playing a big part. People do want an RIA.
Yeah, I mean, first of all, thank you for having us. We're very excited about this. Wealth management is a huge industry, $7 trillion industry in the U.S. Robinhood, as of Q3, $160 billion in AUM. With Trade PMR joining us, that takes us to $200 billion in AUM. And what we find is that as customers get older, their financial needs become more sophisticated. The need for personalized, high-quality advice increases. And Rob and team have just built an awesome platform with great technology, and we see an opportunity to accelerate that and to connect their network of advisors to our 24 million plus customers and give them access to awesome tools as they go on their financial journey.
And Rob, talk a bit about
Broskies, I totally agree. I hate bots for customer support. It is super annoying. Just let me talk to somebody real, please.
the demographics here. You've talked about sort of this gap, and you were describing it as maybe your RIAs are sort of the age of maybe the parents of the average Robinhood investor. How are you going to bridge that gap and talk about the demographics?
Yeah, we really want to create a multi-generational platform that helps bridge that gap and kind of introduces parties back and forth to each other. Because, our generation, that is retiring and so forth, even in the advisor world, they're looking to try to generate relationships with the next generation. And the truth of the matter is 70% of heirs fire their parents' advisor when they inherit money. And that's a really catastrophic event. And it's very difficult to reach that generation. So, with Robinhood, we don't have to do anything but reach them exactly where they are, where they have their products, where they have their services, and where they enjoy their user interface. So it makes this a real win-win.
$40 billion in assets. Do you expect any attrition? Are there any of your clients who just might, no offense, Vlad, not want to use Robinhood?
We haven't heard of any yet, so everything seems to have gone over really well. I think people understand this, and they understand the advantages this is going to present.
Like, bitch.
And Vlad, we've got Schwab's annual conference here. A lot of the products that you have launched would compete directly with Fidelity and Schwab. Can you talk a little bit about competing with the incumbents and the success of trying to basically take assets from them? You've offered some promotions, but are you seeing that flywheel continue, and what have the asset transfers looked like?
Yeah, asset transfers have been quite high. In the past quarter, it was we broke through the full year record of net deposits in just 3 quarters with one left to spare. And I'd say when we talk to advisors, registered investment advisors, one thing that they don't like about the incumbent platforms is that they're competing with them. So they have their own in-house advisors, and there's this constant fear that their custodian is going to try to take their account. And I think that's something that's been missing since the TD Schwab consolidation. And what we can provide with Trade PMR is a level playing field for advisors. You shouldn't have to worry that your custodian is going to compete with you for clients. And I think that's a big thing. Like, we talk a lot about the technology, the user interface, incorporating AI, but I think the biggest thing is just being able to compete for accounts on a level playing field and also access the Robinhood network for client referrals.
What is this going to cost? And the Robinhood generation really grew up with free trading. I wonder how you're thinking about pricing some of this. And maybe, Rob, you could speak to what you charge at this point.
Yeah, right now our price is going to remain the same, and we'll continue to price everybody the way we have today. And most of those are very low cost anyway for just the platform usage. So we'll continue that for the time being, and I think everyone's acceptance of that.
And is it still going to be free? How are you thinking about that? Maybe all of a sudden needing to charge for these services?
In a way, what we're building is a marketplace. So we want to enable these advisors who are very much like entrepreneurs to connect with to connect with our customers. So the advisors will have freedom and flexibility to charge whatever they want. Of course, we'll try to make our overheads as low as possible and really make it so that customers have access to the best quality advice. And I think there will be a natural competitive dynamic, as with any market. But
real quick, Dan R., thank you so much, dude. You sent me a Solana. I appreciate you. I just checked my Coinbase. I don't know why the alerts don't work. I've tried for like weeks and I cannot get it to work. But dude, thank you so much. You're insane. I appreciate it. Oh, it's so loud in my ear. I don't know if it's really loud for you guys, but appreciate it.
But yeah, it's really about empowering advisors with the best technology.
And so, Rob, we got Josh Brown on the line. He's got a question for you.
Hey, guys, I want to start by saying congratulations. Rob, I've known you for a long time, and I think you've built an incredible business, and this must be really exciting for you and Monica and everyone else. I wanted to ask, and either of you can answer this, there's about 350 RIA firms currently platformed on Trade PMR, and about 1,000 plus advisor representatives. What percentage do you guys think will be interested in taking on Robinhood clients? How many are going to want to be in this referral network? And then take it from the other direction. What percentage of Robinhood users do you think are looking for an advisor relationship? Thank you.
That sounds like I'll answer the first one. You can answer the second one. I think almost all of them will, Josh, after they realize what kind of client base actually Robinhood has. I think sometimes people look at that and they think that Robinhood is just all small accounts, and it's just not true. They've accumulated, these are Henrys that have accumulated a lot of wealth in many cases, and there's a lot of opportunity for those individuals. And we know they've already hired advisors elsewhere. So with this transition and this merger, we're going to be able to provide that service really, as a custodial platform at Robinhood as well.
And Vlad, I want to jump in just with one last question while we have you about, first of all, stock price. Robinhood's up about 40% since the election, largely on this expectation that new SEC chair could be a bit less hostile, at least towards crypto. What's your expectation for the new administration and the ability to maybe launch products quicker in the future?
I think there's a lot of optimism. I think that the incoming administration embraced this new industry, and I've been saying for a long time there's two big technological shifts that could change the financial industry over the next decade plus: crypto and artificial intelligence. We want to be at the center of that. And actually, when we talk to advisors, they really care about both of those things as well. They're asking about how they can incorporate artificial intelligence to serve more customers, improve their quality. They want access to crypto assets as well, which they don't really have access to through traditional platforms. So I think that the future looks bright. We're very optimistic, and I think that Rob and team are going to be a big part of that.
Is Dan Gallagher, your chief legal officer, going to get the SEC job?
He's got a nickname, right?
What's that?
The Crypto King.
The Crypto?
We call him the Crypto King.
You might lose him to the SEC.
Oh, God.
Well, we'll see. I think the country would be lucky to have him, but of course, we think he can have a lot of impact being the chief legal officer at Robinhood as well.
We will leave it there. Vlad and Rob, thank you.
Very, very strange. All right, NVIDIA earnings looming large over the market.
Speaking of great fundamental companies, Jim, what about tech? I mean, those are the names that got us to these all-time highs. Are they going to continue to take us there? We got NVIDIA coming out tomorrow.
Well, okay, so let's talk about NVIDIA. I want to give a hat tip to Josh, who's the one I think of all of us who's been in it the longest, maybe you too, Jason. But look, the report is likely to be very good tomorrow. There's no reason to think it will be otherwise when you look at what the hyperscalers are talking about, CapEx, and basically every news item is people can't get enough of the chips. As far as the short-term price action, I would say really don't pay attention to it. A lot of this has to do with short-dated options that are people putting on to play the pop, presumably after earnings happen, and then they sell the calls, and that makes the stock go down. So don't be worried about the short-term action. Regarding tech in general, I think for the same reasons that we've all been talking about earlier in the show, people are going to be loath to sell these going into year-end. Again, you don't want to take a taxable gain, and if you're indexed or in some way benchmarked, you're not going to want to take the risk of falling behind the benchmark. By the way, and I just want to tie this into what Josh was saying a second ago, when you talk about bottom fishing and why it's really a bad idea right now, is because the opposite of what I just said applies. The things that have gotten decimated this year are likely to be tax loss candidates. They're likely to get bear mauled in December. That's not where you want to be shopping right now.
Jason, I know you've owned NVIDIA. Jim just said you might have been in it the longest. What do you make ahead of the print? Is it too late for someone that hasn't gotten in at the price action that we're seeing now?
I don't think so.
Okay.
I think the question is obviously is how sustainable is this ongoing AI compute demand? How sustainable it is going forward? Yes, the stock's up 189% year to date. We're expecting about $33 billion worth of revenue. We probably will surpass that somewhat. I think in the next quarter, however, when you really start to see Blackwell come through, that will be the bang out quarter, which is the quarter that we're working through right now, which we potentially see $38 billion worth of revenue. So I continue to like this story. We hear from the hyperscalers and all the CapEx spend that's going in this space that obviously NVIDIA continues to capture. There's not a lot of competition for them currently. So I continue to like the stock, and I think that maybe you're not buying it right here, but there will be opportunities that will present themselves. We've seen how this stock has traded over the last few quarters.
Josh, what are you waiting for ahead of NVIDIA as an owner of this name as well?
There's a report out there that the implied swing for NVIDIA, up or down, is expected to be about 8.5%. That's in line with the average swing that we've seen over the last 12 quarters, but the company is much bigger than it's ever been. It's $3.5 trillion. So a swing of that magnitude is almost $300 billion, which is more than almost every publicly traded company's market cap. So we are basically looking at it.
That's insane. An 8.5-point swing is more than a bunch of market caps of other companies.
Situation where the biggest, most loved, most celebrated, most well-regarded stock in the entire market is coming out with an earnings report that yet again they guided higher going into. Analysts are now looking for $33.28 billion, which was a guide up from last quarter, 70 cents in earnings per share. That equates to 84% year-over-year revenue growth and 89% earnings per share growth. So my comment.
This is kind of one of those, NVIDIA is one of those stocks, right? Like, it's kind of like Tesla. Hold it. If it goes down, just wait. It's going to go up, and it's going to surpass its high, and you're going to make money on it long term. It's the innovation of AI is going to explode this stock for sure.
Here would be, yes, we all hope for the best, but let's all be very honest with each other. A company at $33 billion in revenue, being able to do 84% growth on that, and then telling you they're going to do it again next time is very low. I think the tightrope that NVIDIA now has to walk is to remain optimistic about the future, but not continue to push out those expectations and give people the impression that year-over-year sales doubling for a $3 trillion company is in any way realistic as far as expectations. I think they get it. I think there's a way to do that. I think there's a way to give guidance, sound optimistic, but not keep painting yourself into a corner of people looking for doubles every time you report. We'll see if they can pull it off. That's what I'm watching for.
Yeah, so it could be some magical verbiage. Stephanie, you actually prefer Broadcom to NVIDIA.
Well, I mean, I like NVIDIA, but I feel like I missed it. But I have done well with Broadcom, just given its diversified revenue mix. You do get the number 2 AI player. It's going to be a $12 billion business for the company. You do, what I really like, though, is they bought VMware, and that's going to be a $4 billion per quarter revenue run rate for them. So the diversification I like very much. And also the valuation is a little bit cheaper, but it's up a lot. It's up 47% this year to date, and so it's had a nice run. I think with NVIDIA, if it is down, I don't know about you guys, but I think it's going to get bought. First and foremost, it's 7% of the S&P 500 in terms of its weight. It's almost 9% of the NASDAQ. So if you're betting against it, you have to offset it, which is what I'm doing with Broadcom. It's a very big position to offset. However, this is a company that has a whole new product cycle story that hasn't even begun next year, and we all know that the hyperscalers are spending tons and tons of money, about 41% rise this year alone and a 17% rise next year. And so that's real tailwinds for the company. So I'm sad I don't own it, but I'm happy I own Broadcom. And I think Lam Research is also an AI play that hasn't had the respect, and I do think that will play catch up in 2025.
There doesn't have to be just one winner, of course. It's good to talk about several.
That's right. Well, I have a ton of industrials that also are benefiting from AI too, so I definitely have AI exposure.
Yeah, absolutely.
Interesting. Yeah, I don't think if you're going to invest in NVIDIA, you're definitely not too late. And again, if it goes down, just buy more and wait. That's all you got to do is buy and wait. NVIDIA remains extremely well positioned for growth. Let's see what they got to say over here again. It's about 18 hours ago. By the way, Broski says, when do we talk about Kaspa, or the videos talk about it? There's really nothing to talk about. It was a sell the news event, and I think it's going to rebound in the next day or so. I don't think there's going to be any. I wouldn't be too concerned about it. I kind of expected a sell the news event right off the bat.
John, welcome to you. Let's start with what could kind of constrain the growth story. What do you see?
Yeah, I think they're going to report very strong earnings, but I think there's going to be some limits in terms of how much upside they're going to be able to post on the guidance. I think there's a number of factors there. With their current generation Hopper GPU, we think there are constraints in the China market. China is really pushing the hyperscalers in the China market to use more domestic solutions. There is a China compliant SKU, the H20 in that market, that's probably going to get pushed out a little bit in Q4. Customers obviously are transitioning to Blackwell. Blackwell is their next generation GPU. It's ramping right now. So some of these customers are opting to push out their orders for Hopper in exchange for Blackwell. And then lastly, from a supply chain perspective, we think NVIDIA recently made a decision to switch their power management IC vendors. And I think that's creating some near-term bottlenecks from a supply issue, which could limit how many of these new GB200 NVL server racks they could ship in Q4.
So I'm trying to figure out whether we should really game out what could happen with earnings, John, from your point of view, or whether we should look longer term, ignore the noise of this week, and try to figure out where the stock's going to be in 6 months' time.
They were having some issues with the Blackwell chips overheating, and I guess they fixed it.
Yeah, I believe that most investors should look through some of the near-term noise here related to earnings. I think NVIDIA still remains extremely well-positioned to grow outsized earnings next year. Our numbers for 2025 are well above consensus. Blackwell represents a pretty significant upgrade cycle because they're going to be shipping much higher ASP server rack solutions versus simply shipping GPU cards.
And I'm seeing here those figures that you're referencing. So again, there are your price targets, 180 on NVIDIA right now. What about the rest of the space? I mean, do we even talk about Supermicro?
Supermicro obviously is a customer of NVIDIA. We like several of the other AI chip vendors in the space, namely like an AMD and a Marvell. This is still a very expansive space. And, more than one vendor stands to benefit from AI chip growth.
Would you kind of delve into some of those? So I don't hate to call them second-tier names, but how much potential upside is there based on what you see happening here into 2025?
Yeah, I mean, I think the AI chip sector stands to grow pretty significantly next year. I think there's going to be three drivers there. Obviously, NVIDIA is one of the key drivers, but we also like AMD because we like them as kind of a primary second source alternative. Like in the history of technology, there's never been a sustained monopoly over time. Customers are always looking for second source alternatives. We think AMD stands to benefit there. And then hyperscalers, companies like AWS and Google are making their own AI chips. And kind of one of the best plays on that opportunity is going to be a company like Marvell.
All right. And before you go, John, what are your parting thoughts on Intel at this juncture?
Yeah, Intel's in a pretty challenging situation, right? They're losing share on a lot of fronts. They just went through a major restructuring, which obviously hit their R&D group, which, they were already kind of challenged to begin with.
Yeah, Intel's been getting their ass kicked. Look at this.
And then lastly, they are still pretty much a non-factor in the AI space. And that's one of the fastest growing sectors in the chip space today. And without any sort of compelling AI story, it's going to be really tough for them going forward.
And it's sad to see them rotated out of the Dow as they try to sort this all out. John, thanks for joining us today.
Weird. Yeah, they've been getting their ass beat. Gold's competition. Let's see.
George,
talking about Bitcoin.
We talked earlier. The gold ETF helped expand the investor base for gold. But the same thing is happening here with Bitcoin. There's been huge inflows into Bitcoin this year. And I'm just wondering, is Bitcoin any kind of competition for gold? How do you view that?
I don't believe it. I mean, some people have tried to find some kind of inverse correlation between flows into Bitcoin, flows out of gold. We've not been able to find anything that's statistically persuasive on that. I think the point is that they basically do two.
Who is this guy? Get him the out of here, all right? This guy, what is he saying? Bitcoin is scarce. It's the most scarce asset on the planet. Gold, you could, I don't even know who said it, but you could potentially go up to an asteroid and get gold off of an asteroid, right? I can guarantee you that you'll never be able to go up to an asteroid and get Bitcoin off of that. You know what I mean? It just, I don't know, these people.
Different jobs. Gold is
it doesn't help that he's like 150 years old.
A very protective asset. It'll protect against potential weakness in equities, protect against inflation, weakness in currencies, all kinds of different things like that. Bitcoin, pure and simple, it's a return play. And I think that people have been jumping onto the return plays. That's what I mean by a risk on mode, which is where investors are right now.
I find it curious that people call Bitcoin digital gold because I don't get the correlation, frankly. I mean, gold has been money historically. It is a store of value. That is very questionable whether Bitcoin is actually a store of value. It does have real use cases. It has industrial use cases. It has jewelry use cases. Not the case for Bitcoin. I kind of don't get that analogy with digital gold. I get it as people trying to promote a potentially new asset class, but not it doesn't have the characteristics that gold has.
It absolutely doesn't. I think the promoters of Bitcoin, I mean, this is why they called it mining. There's no mining involved. This is a computer operation, pure and simple. But they called it mining because they wanted to seem like gold. Maybe take some of the aura away from gold. I think that was what they were trying to do, and this digital gold thing. Look, the returns have been stellar in the 15 years since Bitcoin was launched. I can't deny that, not a problem. But it is all about returns, whereas gold, I think, Todd mentioned the diversification benefits. As I say, and the protections that gold offers too. Those are really, really crucial for investors.
Bitcoin versus gold, as an ETF flow guy?
To me, crypto is definitely risk on, right? It's a much newer asset class relative to the history of gold. I think the interesting thing that will happen is now with the new administration, they seem to want to, the idea is to put a solid regulatory framework around crypto. What does that do to its return characteristics? Does it go from being a speculative asset to something more streamlined like gold would be, or does it remain a bit of a wild west? So there's totally different use cases to me.
Yeah, I want to talk about gold as a hedge against inflation. So there's this very strong belief in gold as a hedge against inflation. But I've seen this debated over the years by strategists. Some note that gold did well during the 1970s, but very spotty as an inflation hedge since then. It didn't do a great job from 2020 to 2022 or early 2023 as an inflation hedge. What's your sense of this? Is gold a hedge? Does it work sometimes? Doesn't work?
It's not a good predictor of inflation. A lot of people think it is. I don't believe it is. Gold's also not going to offer you much protection against sudden sharp moves in the rate of inflation. So when you see CPI at 9%, that's not the time to go rushing out to buy gold. Gold comes into its own when we have sustained high inflation. By sustained, I mean a minimum of 2 years, and by high, I mean 5% or higher. Whenever we've had that, then gold has done very well, offering you returns of about 15% a year. But in the most recent bout of inflation, we did not have sustained high inflation. Gold and inflation were going up together, but not because of any cause. I think gold was going up for different reasons.
Yeah. Any thoughts on that? Still?
Yeah, I think it's all about the environment. I pay attention to, again, dollar real rates to me. That's the important overlay for gold. Strong dollar, usually not great. Weaker dollar.
Gold's dollar denominated.
Yeah,
it costs more to buy it.
And what are rates doing? And I think in terms of flows, for me, earlier in the year, gold flows were kind of agnostic despite the great performance. I think that was because stocks were up, bonds were offering good yield, they were starting to get back onto the field, and crypto was strong. So what are the alternatives doing instead of allocating to gold?
Yeah, I would note, as successful as the GLD is, it's not been immune to competitive pressures. It has spawned a huge wave of competitors. Here, put up a couple of them here. The iShares Gold Trust IAU is out there. They charge a lower fee of 25 basis points. In 2018, you launched a lower price fund, the Spider Gold Shares mini share, GLDM, which charges 10 basis points. There's GLDM there. And that's seen significant inflows. There's also competitors, and I think this is interesting, seeking to take advantage. It's a little quirk in GLD. Investors can only redeem their shares for cash. This is true of almost all these gold ETFs. But in 2014, Van Eck did launch the Van Eck Gold ETF, OUNZ, you see is the symbol there, and that provides the option to redeem shares for physical gold, including gold coins and bars, and it too has seen inflows. Is there a demand to physically actually suddenly convert into gold?
So. Let me correct you. Investors can buy and sell GLD. The investors cannot redeem.
Yeah, redeem.
It's only the authorized participants, the broker dealers who make a market, who can create or redeem the shares. So you can buy and sell GLD. What GLD offers is exposure to movements in the gold price, and as you say, $75 billion worth of investor dollars over 20 years. That means that's something that investors definitely wanted. We were the right product at the right time, and I think we still are. I think that's why we're more than twice as big as the nearest competitor as well.
Right. So the difference between, I just want to get GLD and GLDM. They're essentially the same product, right? One is 40 basis points, the other's 10 basis points.
And GLDM is based on 1/50th of an ounce at inception, whereas GLD is based on 1/10th of an ounce at inception. So it's a lower share price and a lower expense ratio to appeal to the retail end of the market.
And we see this with a lot of big ETFs, right? I mean, SPY has this too.
You know, a category in ETFs is popular when it starts spawning similar products, and then the fee race starts to the bottom, and then you start getting all the different quirks that you mentioned. That's how you know there's a sustainable ETF asset class, either brewing, developing, maturing, whatever you want to call it.
So do people, I'm trying to think the difference between the two. Do active traders trade the GLD because it's more liquid than GLDM, or does it?
Active traders certainly do, and there's an awful lot of institutions are active traders. There's also an awful lot of strategic investors who say, I want to put 5% of my money into gold, but I need to rebalance that because the values in the portfolio are fluctuating constantly, so I need to rebalance that. The low transaction costs that GLD give you can outweigh the higher expense ratio that you pay for GLD. Also, GLD has an options market. The open interest in options on GLD are 99.5% of all of the open interest on all gold-backed ETFs. We have an options market in GLD, nobody else does. And options can be helpful.
There's no other gold ETF that has an options market, just GLD. Is that right?
Yeah. It's the only one with a real options market, and it can be nice to leg into a position or to write covered calls.
For a small investor, I mean, 30.
Listen, are we into this for money, or are we into this just because like we want to back gold? I'm pretty sure the whole point of investing in stocks and everything else to get a better return on your money, right, that you put into it. Buy Bitcoin, don't buy gold. I mean, I like both, don't get me wrong, but like, give me a fucking break. Trump 2.0 will be different than the first regime, says Anderson's Capital's Peter Anderson. Let's see what they got to say over here.
Shaking off, at least temporarily, those concerns about rising tensions between Ukraine and Russia. So how should investors position themselves given the geopolitical risks? Joining to discuss that and more is Peter Anderson, the founder and CIO at Anderson Capital Management, and Chad Morganlander, the senior portfolio manager at Washington Crossing Advisors. Peter, how do you factor in to your portfolio management? And you run a very concentrated portfolio. How do you factor in these geopolitical tensions, if at all?
What is a portfolio manager to do these days? And in my opinion, these things are transient. I know I don't want to trivialize them, but in terms of how one would pick stocks, there's a number of possibilities. One possibility, which is what I pursue, is to almost ignore this as, dare I say, noise, but still focus on the stocks that we think will do well. And remember, we're in Trump 2.0 now. A lot of investors are trying to figure out if this is going to be a replay of Trump 1.1, and if that's the case, maybe we just redo our stock picking. But I don't think that's a good guarantee. I'm thinking that Trump 2.0 will be very, very different from the first regime, and that we need to focus more on fundamental stock picking rather than saying what are Trump's favorite policies and how can we play into that. That is far more risky, in my opinion, than doing pure stock selection.
So I hear you suggest.
Dan R says 100K Bitcoin today, LFG. I hope so.
That while the Ukraine situation is something you can sort of set aside as, quote, noise, I think that was your word, the Trump 2.0 and the potential changes to taxation and regulation and immigration and all of those shuns could be something that you're going to have to, and are indeed now, taking into account in your stock evaluation.
Well, I'm actually saying almost the opposite, that so many of these...
Well, then you confuse me, Peter.
Okay, so many of these things are speculative in terms of where we think Trump is going to go, right? So if we were to pick stocks based on what we think he's going to do, what his policies might be, I think you could end up in several dead ends simply because he's so unpredictable in terms of what his policies will be. Certainly, we're thinking that tariffs will be a repeat. But in terms of other steps he's taking, I'm not certain that we can be at all confident that when he's moving forward, he will replay the steps that he did. Thus, when you're looking at stocks, I think you go back to your own playbook and virtually almost ignore what we think he's going to do in this term.
All right. Thanks for the clarification.
Chad, build on that if you would. So many people right now are looking at these outsized moves we've had since the election. Maybe it's the food space because of HHS. Maybe it's Bitcoin, which is up 35%. Do you fade that? Are there entry points this creates for you? Are you chasing it? What's the strategy?
So, I've been doing this since 1993, and my partner and I, we have a discipline. You would not chase it. You'd stick to your knitting. When you have an election cycle and there's a winner, the worst possible knee-jerk reaction is to then change your discipline. So we would be mindful of being in high-quality names. Yes, this poses risks regarding the HHS when it comes to healthcare, but we believe that the risks over the long run are immaterial. So we would move up the quality spectrum. We're at a high multiple, about 24 times this year, 21.5 times next year. We're trading at a market cap to GDP of 2 times. So we would be more critical about the investments that we're making.
Yeah.
And that doesn't mean you shouldn't invest in equities, but you just want to be in the higher quality companies.
Interesting. Bitcoin's killing it right now. 94,000. It was just at 500 a second ago. Crazy. Absolutely crazy. All right, moving on. Market Navigator will overheating hurt NVIDIA. Let's see what they got to say. I doubt it.
NVIDIA will, meantime, release its quarterly results after the closing bell tomorrow.
Actually, it's today.
Expectations are high despite reports of overheating issues with its newest chips. Our next guest believes NVIDIA will beat estimates, and there is no alternative as a pure play in this area. But he does have some add-on names that support the space if you're looking for a little bit lower volatility. David Miller is co-founder and chief investment officer at Catalyst Funds. David, welcome. Good to have you with us. Your views on NVIDIA have changed, I'm told, since the last time you were with us. Explain what you were feeling then and what you're feeling now and why.
Yeah, well, my views have changed because the data's changed, so my views changed with it. Essentially, the old data essentially told you that you should try to model off of Moore's law. But with this most recent earnings report that we saw from Meta, it's become clear that things with AI are not behaving like Moore's law, meaning that the Llama 4 models they've indicated will take 10 times as much compute to train as Llama 3 did. And when you look at Meta's last quarter spend, they're north of $8 billion CapEx, and most of that was going to this data networking. So you can see from the hyperscalers that we've already essentially baked in a beat for NVIDIA's earnings, and that's why I'm more bullish than I was previously.
So in short then, because it's going to take so much more computing power, and because NVIDIA is really right now the monopoly power in that space, there's no place to go but to NVIDIA to get the power you need.
Exactly. NVIDIA is essentially a pure monopoly, and that's continuing with their next generation Blackwell chips. Those won't be in this quarter's earnings, but they will start next quarter's, and they'll really be baked into the January quarter. But you can already see from the numbers that came out with this very elevated CapEx spending by the hyperscalers that money is clearly going to NVIDIA for their current iteration of chips. And they've indicated, at least in particular, for Meta, that's going to continue to escalate quite rapidly. But the same trend we're going to see at Google and Microsoft. These companies have no choice but to compete in that arms race.
Right.
You can't afford to lose an AI.
David, thank you so much for being with us. David Miller, Catalyst Funds, co-founder, chief.
Shout out to him. All right. I think this is, what do we got? We got like 2 more news clips. The AI bull market is a long way to go, or has a long way to go.
Tech stocks outperforming today as investors prepare for NVIDIA's critical earnings report tomorrow. Let's bring in NVIDIA shareholder Doug Clinton, founder and CEO of Intelligent Alpha, here at Post 9. Doug, good to see you.
See you, Mike.
So it's interesting. There's always this sort of underlying confidence in the overall story with NVIDIA. We know what supply demand is. We know they're, the only game for a certain part of this market. On the other hand, there's all these sort of doubts that filter in, whether it's about the pacing of the rollout in the next generation, the overheating stuff, whether in fact, return on investment is happening. How does that all come together into tomorrow?
I think tomorrow it's almost like deja vu. I mean, to your point, right, last quarter, the issue was Blackwell. Were we going to get a delay? We did get a delay. It was about a quarter. And if you look at what NVIDIA stock did after that, it was kind of well rumored, but still the stock sold off 10+%. It was a pretty decent sell-off.
Yeah.
And so I think going into this quarter, the big topic is going to be this Blackwell issue with overheating. I don't think this issue is nearly as serious. So just to kind of put the two in context, the first issue is really about delaying the entire rollout of this product line. The overheating issue is a little bit more limited. So this is about a specific product, the GB200. It's their top-of-the-line server product. Meta, Microsoft, these are the customers of that product. Even if that gets pushed a month, a quarter, I don't know that that's going to be that big of a deal for this particular report, but it could be something we hear more about into next year.
And then you keep hearing that investors really crave some kind of visibility toward even after next year. I mean, in other words, how much life is behind these demand trends? And into that comes this debate about whether, in fact, things have slowed down in terms of improvement of all these AI models, and what does that mean for the investment pace?
I think that's going to be topic B tomorrow, and I expect Jensen will get a question about the AI scaling laws.
Yes.
Right, and so the scaling laws, just to give the quick 101, is over the last few years, what we've seen in AI model development is the more data that you put into these models, the more compute you use to train the models, the better the models get. Very predictable. And what we've seen in reports more recently from OpenAI, from Google, is that the most recent models that they've trained haven't quite been as good as they expected based on the scaling laws. And it's kind of been a hot topic of debate in Silicon Valley. Even Sam Altman tweeted about it just last week. He said there is no wall. So maybe it's not an issue. We'll see.
Yeah.
But I think Jensen really does need to address that question, because that's the 18 to 24 month picture. Do we get to a point where these companies need to spend on something other than just compute?
How is that coloring your view on just the broader kind of opportunity set within tech for companies that have some leverage to this trend? I mean, I'm even thinking about Microsoft. Stock has really been dead money for a while. We did have Satya Nadella on earlier saying some pretty optimistic things about uptake of Copilot and things like that. But what are the implications, I guess, of this debate about scaling?
So at Intelligent Alpha, we use AI to make investment decisions. We're obviously fully bought into this AI trend. What I would say is 2 things. Meta, Microsoft, I think they're still both stocks that are in a good position to benefit in the near term from AI. Customers are actually using it, right? Meta's using it to drive engagement, better ads. Microsoft is selling OpenAI to its cloud customers. But I think if you expand out, longer term view, 2 to 4 years, we still feel very confident we're going to be in an AI bull market. It doesn't mean there won't be pullbacks here and there, but I think we've got a long way to go, because companies are really just starting to adopt AI, and we'll start to see those revenues over the next year and after that.
And then, of course, you have the policy and regulatory side. You don't really know who exactly all the personnel are going to be or what the priorities are going to be. Does it scramble the picture at all for you in terms of whether tech is going to have more or less leeway?
A little bit, and I think anytime you have an administration change, that does beg more questions, because we don't really know. But I think the net of it is this change, it can't be much worse than the regime we just had in terms of scrutiny on big tech. And I think if you kind of read between the lines of what the current administration, or the new administration rather, has said about big tech, I think they're balanced in the reality between making these markets more competitive, but also that we are in a race with other countries to develop AI. We don't necessarily want to weaken our best companies, which are our best chance to win that race.
Yeah, I mean, if most of the priorities are about, like, hey, loosen up the content moderation function, I mean, it doesn't seem like that's really existential for anybody. But we do have the Alphabet news today about the idea that the government might look to separate out Chrome. How does that impact your thinking about that name, if at all?
My guess is if there was a betting market, if we go to Kalshi, right, or Polymarket, everybody's betting on things now. I would have to think that the odds are that it's not going to happen versus it would happen. So the smart money is still, it probably won't happen. Even if it does happen, I mean, we've done some math on this in the past. If you look at breaking up some of these components that are stuck in big tech, you might even get a little bit of a value unlock in the near to medium term. And so for Alphabet, splitting out Chrome, I don't know that it's going to be that big of an issue, and I wouldn't expect it to be something to really weigh in the stock in the near term.
Yeah.
All right, let's see. Moving on. One last news clip. NVIDIA to release Q3 results today.
We begin with two big stories tonight. Walmart hitting a fresh all-time high after raising its sales forecast for the full year on strength outside the grocery aisle. We'll get more on that in just a moment. But first, NVIDIA shares popping nearly 5% and closing just $3 shy of its own record. The move comes ahead of its earnings report tomorrow night. Shares are up 17% since its last report. Should we expect more gains for the AI darling? Wall Street certainly expects more gains. They've been hiking the price target, hiking estimates going into this number.
And look, we have for Pavlov's dog. We follow this. We've been trained to expect this. The question is how big of a beat. Karen has been saying this. We know it's going to be a beat. I just get back to where I look at the multiple on the stock and where the growth is, and where the growth is at least very comfortably to me until the end of 26. Everything we got out of hyperscalers, everything we know about capex, everything we've heard the company reassure us, and unless the company, who I think at times has been overly conservative, if you think about what they've been telling us each time, why wouldn't you believe them when they talk about production issues? When you think about where GPU capacity is, and ultimately where there is a constraint, and where you think about both consumption and where we are in terms of building out power and data in this country, I'm going to just hold my nose and say I think the stock's going to do okay tomorrow. I don't expect it. It doesn't need to rally 10%. It needs to hold these levels.
Wedbush says, expect another drop in my quarter. That's quite a setup, Grasso.
Yeah, it sounds like it's set up a little too high bar, I would say, for them. And eventually, it's going to not have a great earnings cycle. But if you think about it, who are their top 5 clients? And I bet you 80% of those top 5 or 8 clients are making their own chips. You have now a delay on top of a delay. You have an overheating of the Blackwell chip. You have there's a lot of headwinds that probably can be penetrated. They have 85% market share still, but it's theirs to lose. So I don't feel comfortable buying it here. I'm going to stay static on that.
There have been some doubts about Blackwell and whether or not we're going to see some slippage in the quarter in terms of whether it be production delays or overheating concerns, things like that.
Well, Tim talked about that. That's not a problem in that it's the demand that's a problem, if there's a problem, which I don't think there will be. But the bar is getting higher. I would have sort of preferred to have be lower. So on today's strength, I sold some upside calls, used the money to buy some downside puts, just because of the way the skew is, that people are far more bullish than bearish. So you could get a put much closer to the money than you can.
That sounds so sensible, by the way. You know?
Are you kicking yourself? Tomorrow morning, there's time.
Tomorrow, maybe it'll be better tomorrow. I think it went out a little worse than where. I mean,
except now everyone's followed Karen into this trade, and that, I mean.
Right. So that, I hate when the bar goes up, but I do still think we're in early-ish innings. Not that there could be some sort of hiccup, but
that's only up 200% for the year. It's not a lot, right?
Yeah, it's nothing. I mean, no, the story is still very much intact. I don't know what ends up being the right valuation, but even with that option trade, net, I am long going into this.
Right. How important is this for the overall market? It's very important.
I think it's very important. And look, I think a lot of other people, recently I've been sort of inclined to look for the broadening trade and fade some of these big names. I will say with these big names, I am trying to sort of look through any one earnings print. What I am generally seeing in my data is that even though the value trade kind of fights back, the mega cap growth names keep coming back and showing their earnings dominance. And, I started to get questions on stagflation recently as people have sort of been debating, is inflation coming back? We're starting to get some concern that the Fed's not going to cut quite as much, tariffs, et cetera, et cetera. And these mega cap growth names, go to secular growth when cyclical growth gets stuck. And so I can see sort of the macro, sort of tailwinds coming back to these secular growth.
Oh, so the defensive trade comes back into play, the defensive element of these larger cap names.
I think so. If you think, we're sort of looking at interest rate pressure and inflation coming back, typically when GDP is sort of squishy, so not negative, but below 2%, that's when growth and large cap tend to outperform. So, macro tailwinds could be returning to these, despite the fact, the crowded positioning and the valuations don't look great.
We have to take the growth, not just in terms of the revenue and the addressable market that we all know is going on both in their core, in the AI world, but also their core GPU. But think about this was a company that made 39 cents a share in 22. So the final full year number was 39 cents, and they're expected to grow at $5 a share in 27. So the profitability of this company is not only up more than, 14-fold, 15-fold, but it's a dynamic where I think we get the sense that their ability to hold margin for the next few years is there. That's why when I look to the out year and I see a 30 times multiple and I look at it relative to the peers, peers within that semi group. I mean, if you're going to own semis, which one are you going to own? Really, I think a lot of other boats have been pulled up by this tide, and I wouldn't be, I certainly wouldn't be chasing some of the ones that we question whether it's second or third place, and we know who's, not even in third place anymore. Their ticker begins with an I. So I like the earnings story. I like the multiple, but I like the margin story to be something that can hold here relative to the peers.
Interesting. All right, moving on. CNBC Crypto World is the next thing. Let's see what we got over here. Bitcoin rises to new record above 94,000. We just broke it again, to be honest. We're at 94,549 as of right now. Crazy. I wonder if we're going to get closer to 100K. I don't think we're going to pull back right now. I think we're going to be at least closer to Black Friday, I think, before we see a real pullback, but that's just my opinion. Don't bank everything on it. Oh, hit that like button, guys. Appreciate you for hanging out. Let's do it.
Today, shares of Trump Media and Bakkt whipsaw after reports the president-elect's company could buy the crypto firm. Coinbase CEO Brian Armstrong meets with the president-elect, and Better Markets CEO Dennis Kelleher gives a critical take on the crypto industry's election contributions.
And obviously, this pullback's within reason, no matter what.
Welcome to CNBC's Crypto World. I'm Tanea McKeel. Crypto markets mixed this morning. As of noon Eastern, Bitcoin climbed more than 1% to $92,646. Ether fell 1 3/4%, and Solana gained a little less than 1%. At the same time, shares of Mara Holdings are surging this morning after the company upped its sale of convertible notes, which we first told you about yesterday. The company is raising its offering from $700 million to $850 million due to demand and plans to use the funds in part to buy more Bitcoin. Shares of the company rose more than 11% by midday. Okay, let's talk about the top stories. The rapper and wife of the hacker who stole thousands of Bitcoin from Bitfinex has been sentenced to prison. On Wednesday, a federal judge sentenced Heather Morgan, who also goes by Razzle Khan, to 18 months for her role in the theft. Just last week.
Is that real? Who is that? Who is that? Has anybody ever heard that music? What was that?
Morgan's husband, Ilya Lichtenstein, was sentenced to 5 years in prison for the heist. Now, after her sentencing, Morgan posted a video statement on X where she said she'd been keeping quiet because she, quote, likes to listen to her lawyers.
It's like Napoleon Dynamite's sister.
But said she would soon be telling her story and revealing other creative projects. Next, Trump Media is reportedly in talks to buy crypto trading firm Bakkt. Shares of both companies soared shortly after the Financial Times reported the news. Trump Media closed more than 16% higher, and Bakkt spiked more than 162%. Trading of that stock halted repeatedly due to volatility. As of noon Eastern today,
has anybody used that Truth Social stuff? Let me know.
the companies traded down more than 8% and up 11%, respectively. Former Bakkt CEO Kelly Loeffler is co-chair of Trump's inauguration committee. CNBC reached out to Trump Media for comment, but didn't hear back immediately. Finally, Coinbase CEO Brian Armstrong met with Donald Trump. A source close to the company told us yesterday that Armstrong attended a private meeting with the president-elect, and the Wall Street Journal reported the conversation centered around personnel appointments by the incoming president. Armstrong donated more than $1.3 million to candidates up and down the ballot, including Trump, while Coinbase also gave more than $75 million to crypto super PAC Fairshake and its affiliate PACs. It also pledged to contribute $25 million for the 2026 midterms. All right, let's stick with crypto's role in politics for our main story. The industry has largely celebrated victories of pro-crypto candidates nationwide, but others have questioned whether the millions that crypto poured into the 2024 election did more harm than good. Dennis Kelleher, CEO of Better Markets, wrote an op-ed after the election where he criticized what he called a bait and switch by the industry, flooding markets with ads that don't mention crypto to support candidates that will be friendly on policy. And this comes as recent polling shows most Americans have a negative view of the technology. Crypto World's Brandon Gomez spoke to Kelleher about his post-election views and the industry's growing influence in politics.
Dennis, I know you had this op-ed in the San Francisco Chronicle. We had spoken previously to an op-ed you'd written to the Kamala Harris administration advising her not to cater to the crypto trade. But in this one, you say what the crypto industry didn't say in its deceptive and effective campaign ads. I'd pull out a couple points. Most Americans, you say, don't actually like or use crypto. Crypto knew this and funneled money into ads that didn't even mention the crypto industry. And to that point, you say crypto shouldn't even be a priority when it comes to what Washington does under this new administration. I mean, can you lay out a few of your thesis points beyond that? And if you really do feel that DC is going to prioritize crypto in its next administration?
Well, sure. Look, I think one of the most important things to understand is that the crypto industry's entire 2024 campaign strategy was fundamentally deceptive. It really was a classic bait and switch and a fraud on the public. Depending upon which report is right.
If I had to stop the cab button, I'd hit it, but I didn't add that one.
The crypto industry spent somewhere between $100 and $200 million on campaign ads in an effort to elect candidates who support their special interest agenda or defeat those who didn't. And it's telling because they spent that money on Democrats and Republicans. And now you've got a lot of elected officials who are in office that crypto spent a lot of money on. And they're running around saying that they've got a mandate for their special interest agenda. But there's one problem, and that's there's no mandate because the American people don't like or use crypto. And
I'm just gonna let you guys light them up in the chat. What? Does everybody not like crypto? It's news to me. What is this guy saying? What is he saying? Who is this guy?
And nothing about this election changes that. And let me just run through a few quick facts. When you say, I don't like crypto or I didn't like things going on, it's not liking or disliking, it's facts. There's a CNBC poll from late 2022 that found that just 8% of Americans had a positive view of crypto. In 2024,
it's because those 8% are probably dumb and got hacked.
there was a Harris poll that found that
Oh, sorry, 8% was positive. All right, the rest of those people probably just didn't know what they were doing and got hacked.
69% of likely voters in swing states, this is a 2024 poll, 69% of likely voters in swing states held a negative view of crypto. Now, the industry claims that 52 Americans own crypto, but that's only based on a deceptive poll that the industry paid for. The actual figure, according to the Federal Reserve survey data, is closer to 8 million Americans out of more than 300 million, and that number is declining. Moreover, of those who own crypto, just 1% used it in 2023 to buy something, which actually is down from 2% from the prior year. And of course, that's not a surprise because you can't really buy anything with crypto. Now, interestingly, just last week,
that would be because there's no regulatory clarity, so nobody can purchase anything with crypto because it's not legal to do so. So that would be the hiccup there. If it was legal, it would absolutely be, it'd be way easier for people to do so. I don't know, this guy is driving me
right?
nuts.
We're talking about current information here and data. Just last week, the FDIC.
Oh, also, and the 1% that they're gauging this whatever data he's talking about, that's the 1% of people that pay their taxes on their crypto. Okay, it's they only have information from people that report it. So yeah, you should always pay your taxes, by the way, please.
A report of a survey of American households, which for the first time asked about digital assets, and it found that just 4.8% of U.S. households used or owned crypto. So by any measure, crypto is a very niche product. It's almost used by no one, and it's disliked, disfavored, and has a negative view of a supermajority of the American people. Now, the election results don't change those facts, and the crypto industry's actions actually prove how disliked crypto is by the American people. Because
you know what, Retro Mike? Good point. And 70% of the people don't have supplemental income to risk it on crypto. Repull it in a good economy in a decade. And that is the best point, actually, I've probably heard it in a while. Good, that's 100% true. Because people don't have extra money to spend. They can barely go out to dinner in this economy. This last administration has definitely ruined this economy, in my opinion. But yeah, I don't know. It's a very good point.
Instead of focusing their political ads on crypto, the industry funneled all their money through into the campaigns through so-called super PACs, which had these generic names like Fair Shake, Defend American Jobs, and Protect Progress. And what did they do? They produced equally generic political ads that literally never mentioned crypto.
Well, and I want to dig into that further too, because the industry, presumably, this influence, this massive amount of money that was poured into this election cycle. I mean, it seems like the industry is going to continue to invest in these types of campaigns, regardless of whether they mention the crypto industry or they sort of, again, hide behind this sort of crypto label, but they're in fact pushing other agenda issues. Where do you sort of see that momentum building in terms of regulation, right? Regulation of the industry. There's an appetite for regulation of crypto. Do you see that changing going forward?
Well, no, I don't. But the important thing is that you've got the crypto industry lording around Washington, D.C., saying to politicians, you should enact our special agenda. You got elected because we spent money on you. And it's true, they spent money on them, but there is no mandate from the American people for anybody in Washington to do anything regarding crypto because crypto was not on the ballot. Think about this. They spent between $100 and $200 million on campaign ads that said things like defend American jobs, don't send jobs overseas, America should be competitive. And now they're turning around and telling politicians that they have a mandate and they should enact crypto special interest legislation, when if anything, those politicians have a mandate to enact very generic, non-crypto topics that all Americans appreciate. So the question is whether or not politicians in Washington are going to fall in line with the fake crypto agenda, or whether or not they're going to put the American public's issues at the top of the agenda. And if you look at every single poll of the American people, you look at the top 10, the top 20, the top 50 concerns of the American people, crypto is nowhere to be found. Digital assets, nowhere to be found. So they're going to try and use their money. They're going to try and use this election in a bait and switch tactic to try and get people to do things that the American people don't want them to do.
This guy definitely voted for Harris, 100%. He's just super mad about this whole thing. He doesn't like anything to do with yeah, this is ridiculous. I can't even.
And I want to ask you about a couple of those campaigns, because crypto, played a significant role outside of the presidential campaign too, right? We've been talking about VP Harris, we've been talking about President-elect Donald Trump's platforms in the crypto space, but also you have to talk about Bernie Moreno's Senate race in Ohio, taking that seat from Sherrod Brown, a long Democratic holdout, turning Republican this cycle, and crypto really played a large part there. So the question is, I mean, how critical was that race in your view, and were there other election races similar to that where pro-crypto-backed candidates, or seemingly pro-crypto-backed candidates, overturned seats?
Well, I think we need to be precise here. Crypto did not play a big role in the Ohio election. Crypto money did. And I'll give you an example. One of the big super PACs.
Dude, what? Just if you guys didn't know, XRP donated like over $1 million to the Harris campaign. So regardless, it doesn't matter. Like, donations, what happened with Biden, right? Biden was donated from FTX like shit tons of money when he won that election. Like, this guy is salty as shit. Why? Why is he so salty?
Crypto super PACs called the Cedar Innovation Fund spent a ton of money in Ohio to defeat Sherrod Brown. And the ads it ran implored him, are you ready for this, to not let the chair of the SEC send jobs overseas. And all these other generic, kind of homespun things that 99% of the American people agree on. But not one of the ads mentioned crypto. So yes, crypto money was important in helping certain candidates and defeating other candidates, but the issue of crypto was never on the ballot anywhere. Think about this. It would be as if the Ford Motor Company spent $200 million on ads and never mentioned cars. Okay, it's astonishing. It's so brazen what they're doing here. And so the issue is whether or not, the crypto money, the crypto billionaires' money is going to buy special interest legislation, or whether or not the people who are in Congress are going to say there's no crypto mandate. All the facts, data, and polls show that. And the crypto industry's own advertising campaign is a de facto admission that the American people don't support crypto.
So I'll
No, all right, you can't, like, he's like saying crypto money. You can't spend crypto with the government. You have to convert it to money and give it to them that way. Like, what is he saying? I am so fucking lost. I don't understand it.
I'll leave us on this question, which for you, what is your best case and your worst case scenario when it comes to crypto in the next administration, the next 4 years?
The best case that's...
XRP gave $10 million to Harris? Did they really? Was it 10? That's so much money. Jesus
foreseeable
Christ.
Under the current circumstances is that crypto does in fact get some modest amount of regulation that includes transparency, that includes oversight and accountability, and it has substantial investor, customer, and financial stability protections. That's the best case. It's not likely. What's likely is the worst case, which is that a bunch of crypto political allies are going to enact the appearance of regulation without the reality of regulation that's going to cause many, many more investor and customer victims, and unfortunately is going to undermine financial stability that will ultimately contribute to the next financial crash in a way that's avoidable and unnecessary, but given the current climate and the current crypto cash, probably the most likely outcome.
All right.
Oh my God, that guy's related to Peter Schiff for sure. All right, BlackRock to send Bitcoin over 100K in the next 7 days. You think so? I think it's possible. It's highly possible. What's Bitcoin at right now? 94.4 still. looking crazy. This is Altcoin Daily. This is the last thing we're going to watch. I'm going to get out of here. Let's do it.
Bitcoin is going to hit $100,000 long before the holiday, I think. It's so close.
The Bitcoin price, again, hitting another all-time high as major institutional player BlackRock, their Bitcoin ETF options go live for the first time in history.
What's the effect that you expect to see when these begin trading?
The impact this could have on Bitcoin is big, but the real danger in this market to the upside, a potential short squeeze, one of the biggest we've seen in a while. Watch today's whole video, because in the short term, this new BlackRock Bitcoin options product just went live, and general partner at Dragonfly Capital explains the impact on the Coinage podcast.
So this is great, and this is another.
I think he's talking about before Thanksgiving, and then, like I said, usually we see a pullback between like Thanksgiving, Black Friday-ish, and Christmas, and then we have a Christmas rally. So most likely, if it is going to hit 100K, if it does, it'll be before. And my guess would be before Black Friday.
The thing that we've seen that just further institutionalization of the space, and it's going to bring new participants in. And no matter what you think about volatility, and we can talk a little bit about that, but new participants is good for the price of Bitcoin. It's good for just mind share on our industry. It's good for continued innovation and acceptance.
And this new BlackRock.
After the new year, somebody's saying in the chat, Chris Hanley. 94.5, yes it is. Let's see, Chinese New Year goes boom. Yeah, you know what? Chinese New Year is a big deal because they gift money. So a lot of that culture will buy crypto and give it to their like family members that way. So that is a big, that's a big push. But I think when Trump comes in and his administration starts, that's probably going to be another rise up, and that's January 20th, I think, next year. So
Rock product has been wildly successful, popular on its first day. IBIT traded 73,000 options contracts in the first 60 minutes, placing the fund in the top 20 of the most active non-index options. And by the way, options contracts have no direct effect on the price. Just the Bitcoin spot ETFs have a huge effect on the price. BlackRock is wildly accumulating, their clients are, but these options more have a secondary effect. Options trading allows investors to play Bitcoin's notorious volatility by letting them buy or sell an asset at a predetermined price based on whether they anticipate the price will rise or fall in a given period. It gives them the option to buy or sell if they want to take the risk.
I think the likelihood here is that we can see a lot more traders get duration, or they start taking bets that are long dated, out of the money, that could theoretically increase volatility. Now, volatility for Bitcoin has been on its way down, which is typical in a institutionalized market, and a market that has essentially just more efficiency. But with the options in place, actually Bitwise recently put out an article that said they thought there could theoretically be a gamma squeeze, meaning that because of the heightened option volume, there needed to be more, and that option volume likely to be very bullish, there would need to be more essentially market makers going delta neutral and buying spot, which could drive the price up, and there's a bit of a flywheel that happens. So if we saw that, we could see Bitcoin all-time highs in short order.
And we are seeing Bitcoin.
Real quick, I'm just looking at like the Bitcoin chart over here. This is on the daily. This is the VWAP momentum, that's what they call it. This seems like it's rising up. The money flow is way high in the green, and the momentum is actually down. The RSI is kind of high, but regardless, when the money flow is green and this thing ticks up, typically the momentum and the price will start to gear up and climb. But yeah, I don't know. It could peak out and then start falling. Like I said, usually around Black Friday we see some sort of pullback, but who knows? I'm not a trader. Take advice from, don't take advice from people on YouTube, rather.
Bitcoin all-time highs as we flirt underneath $100,000 Bitcoin. And there are $5 billion worth of Bitcoin shorts to be liquidated if we hit that 100K BTC. This many liquidations equals a short squeeze. So this is all data from CoinGlass. If Bitcoin falls too low, that's longs being liquidated that'll send the price lower. But if Bitcoin climbs high quickly, then shorts get liquidated, sending the price higher. Let's talk about the latest altcoin news. But as we wait for a potential short squeeze, the big question is, do we think 100K per BTC soon is possible?
Bitcoin is going to hit $100,000 long before the holiday, I think. It's so close, and there's no resistance here. This is the crypto of choice for financial institutions and sovereign wealth. They don't care about anything else, just Bitcoin. And so the aspect of mining it gets more complex. Big debate about the electricity needed to do this. But at the same time, it's an alternative asset here to stay.
Weren't you over there in Qatar? There was something to do with a crypto conference over there. You had something to do with it?
Yes, I was there. We still do not.
The springboard?
Well, the truth is, sovereign wealth has still yet to get involved. People keep talking as if they are, not yet. But when they come on, this will go and go and go and go because they're agnostic to the price. They're going to hold it for 10 years.
So let's talk about altcoins. But this is my play as we approach the coveted 100K mark. If I want to be long, if I think the Bitcoin price will get there, well, number one, trading on Margex, they're an exchange partner. I don't want to risk my valuable Bitcoin trading. I will risk the altcoin gains, use them as the
Oh, all right. I'm not gonna watch this part. He's just chilling this fucking ass.
Link down below. And breaking news for Cardano, ADA and XRP teaming up.
On what level do you see Cardano and XRP working together? I think we can add amazing DeFi components to XRP. I think they can add a lot of liquidity and they can add a wonderful stablecoin layer, bridges definitely, and it would be super cool to see if there's a path to get Midnight working with XRP. So we're meeting with David Schwartz here in a little bit. I've been texting him back and forth. His people are talking to my people. I send him over some of our papers as well as the code for Midnight. And we'll see where that goes. But again, they're nice people. I've known them forever, and it's nice to have them back in family. And we're going to figure this out as a group.
So Charles Hoskinson did have that meeting with Joel Katz, CTO of Ripple. It was great talking to Joel Katz about Midnight and XRP. Wonderful technical conversation. Actually, just a reminder on what Midnight is.
Midnight is a gift to the entire industry, and it's what is going to get us where we need to go as an industry. We need private smart contracts, and we need identity so that we can get all of those real world assets and security tokens and other such things in. And what's beautiful is the very same thing that does Bitcoin DeFi on Cardano by adding Midnight to the list. So you have a tri-hybrid application, 3 blockchains, Cardano, Midnight, Bitcoin. Bitcoin for the first time ever can have a privacy layer for private smart contracts.
And in AI altcoin news, Chain GPT, a reminder on their tokenomics. How does Chain GPT stay deflationary? Here's how our burn mechanism works. 100% burn prompt marketplace, 50% burn on chatbot, tools, NFT generator. These are all a part of the Chain GPT products suite. 1% burn on all launchpad races, and then buy back million. But the news today is this. Today, Injective is officially launching iAgent, a groundbreaking SDK that enables anyone to create their own on-chain AI agent, meaning Injective just became an AI play in a large sense by leveraging large language models, LLMs, such as OpenAI's ChatGPT. iAgent redefines the possibilities for AI finance. In layman's terms, what exactly is this? What does this do? AI Agent is essentially an AI-powered tool designed to simplify blockchain interactions on Injective, allowing users to execute commands like sending payments, placing trades, and managing funds through natural language commands. With iAgent, users can create their own agents. An agent in this context is like a bot or automated assistant that can perform tasks on Injective. You can create multiple agents. You can have an army, each with its own configurations, and manage them independently. And also news for Ethereum, at least Ethereum L2, Metis. 10% locked soon to secure our decentralized sequencer, meaning they're about to lock some tokens. Metis just announced that 10% of the supply will soon be locked to secure their decentralized sequencer. Obviously, locking up supply tends to be bullish for price. And as they say themselves, sequencer node operators and users that contribute to sequencer mining through LSTs, liquid staking tokens, earn passive rewards to secure our network. Maybe that's why we're headed for supply shock. Very interesting to see each different crypto's tokenomics. And looking at some adoption news for AI, crypto, humans AI, or at least awareness news with the United Nations. No challenge is too great for Human, the most advanced AI worker tackling humanity's most pressing crises at the United Nations. This in a summit in Baku, where global leaders gather to shape tomorrow's solutions. Human is at the heart of AI innovation across both private and public sectors. And we don't have to speculate on this. We can see this. Humans introduced to COP29. AI workers can save the planet where humans have failed. Don't forget to like the video. And Humans is aiming to be the blockchain for AIs. So cool to see the progress. That is the video.
Sounds like a bunch of shilling, to be honest. Just my opinion. All right. If anybody's just joining, get into the recap segment of things. Bitcoin's breaking all-time high again, 94,595 bucks as of right now. We got Ethereum at 3158, still kind of stagnant, but it's all right. XRP is up 5%, almost 6% on the day. $1.13, almost $1.14. We got ADA at 83 cents. ADA, I told you guys, like 30 cents or so. I was like, it's an easy 3 to 6x. That's my opinion, and it's performing very well. I still think it has way more to go. I think its all-time high was like $3 or something, $3.30 around there. Kaspa 16.3. Again, it was a sell the news event on the listing of Kraken. Kraken's a tier 1 exchange in the US, yes, but I think if it was Coinbase, it would have done a lot better. That's my opinion. Kind of expected a sell the news event though, to be honest. Yeah, I think in the next couple of days, hopefully we'll see a rise up on it, but it is what it is. If not, make sure you guys take profits. Just don't be stupid and don't hold bags forever. I think Kaspa is going to do very well in this altcoin season coming up, but again, only time will tell. We'll have to see what happens. LTC, 87 bucks, 87.58 to be exact. LTC is looking all right. I really wish it was moving more. Its all-time high was like $400, 420 bucks or something. It's still got a lot of room to go to get back there. I don't know if it's going to. We're gonna have to see, but yeah, I wish there was some more news to LTC. Unfortunately, it's just kind of a payment system that people aren't really seeming to use too much anymore. Solana, 241 bucks. That's crazy. Solana's doing really good. Bonk actually is up today, 6.12%. Is this Polygon? 46 cents, I think, 7% up on the day. Not too bad. Let's check out Crypto Bubbles quick. That's on the week. Biggest earner of the day seems to be ADA. Look at that, 14.8%. Nice. We get HBAR down 7.9%. This is Hedera. They're working on, I guess, with Cardano, if I'm not mistaken, Cardano and Hedera, some sort of voting system for like elections and stuff, which is very, very smart. And I still don't understand why they didn't already implement this, but hopefully we get something like that. It's just going to be a lot of I guess there's a lot of iffiness when it comes to voting on platforms, because then you can potentially get hacked and all that stuff. Let's see, ADA's, Cardano was $2.70 all-time high, was it? I thought it was $3. You sure? Wrong one, damn it. There we go. 309, there we go, 309. Well, that's what it says on CoinGecko. I don't know where you're seeing it, but yeah, 309, 73% down still. Coins that are 80% or 70, I would say, I usually went for the 80% down a couple months ago, but still 70% down is still pretty good ones to get into. Not all coins are great to get into, but Cardano is one of those coins that they've been innovating in the background this whole time. And it's just a good project. I mean, it's been holding also in the top 20, right? It got kicked out of the top 10 for a little bit, but it's back in there, which is awesome. It's good to see. Dogecoin, again, it's unlimited supply, hurts this project a lot. It's gonna be hard to get back to its all-time high, but even to double where it's at now, right? If say it was to go to 80 cents, I think its all-time high was 73 cents. To get to 80, you're gonna have to double this, and that's gonna flip BNB, which is like, that's a lot. You know what I mean? It's a lot to jump up to, but I think Dogecoin's been doing well. Flashbang, sorry, Fear and Greed Index at 83. If anybody's just joining, we're at a 90 yesterday. This is one of those things. Over 75 makes me nervous, but 90, when it gets into the 90s, that's when you're most likely gonna see some sort of pullback. And again, that's what we saw towards the end of the day yesterday, which obviously made that needle come down. But yeah, that's pretty much it. Real quick, Fully Electric said something earlier. He said, based on the 2020 BTC chart, Bitcoin rally has nothing to do with who is president. Bitcoin will move no matter what. The pullback will be small, and BTC will hit 100K well before the end of the year. Hell yeah, Mr. Fully Electric. Appreciate you, buddy. 100% the down hell. Down hell, what are you trying to say? I'm trying to figure out what you're saying. Fully Electric, I'm sorry. Oh, the downhill. That makes way more sense. Duh. Downhill will not be as bad anymore because the ETF. Yeah. All right, never mind. I get what you're saying. Yeah, because the ETF was launched for Bitcoin, the pullback isn't going to be as bad. I get what you're saying. All right, you were losing me for a minute. Let's see. My spec play is 79%. Is up 79%, which is nice. If it gets to enough to cast out some GPUs, I'm gonna sell. What do you? What was your spec play? 79%. What was your spec play? Real quick, honestly, what's Radiant doing? Oof. Crypto KJ, it looks for you. I thought it was gonna be up today, but Clearly not. We dropped a decimal point again. What's all-time high? All-time high. It was almost at a penny. Oh, wow. Damn. Interesting. This has got a low market cap, Radiant, but Crypto KJ's bullish on Radiant. He thinks it's gonna do well. It might do well. I guess some decent tech behind it that I didn't know about, to be honest. I just never looked into it. All right, let's see. What did you get? XLM. Oh, that's Stellar. That's right. 13.9% of 25 cents. Nice, dude. I've never purchased any. Damn, holy shit. Look at this. 9 cents, damn. Right up to 25. Hell yeah. Is this all-time high? No, 7 years ago. All-time high 7 years ago. That's not good. That's not good. I don't know what they're doing, but almost 7 years ago is all-time high. That means it didn't do anything in 2021's bull run. That's not good. That's not good. See, like things like that, that's where I would, like, even if it's running up now, it looks good. Let's go to the max chart. That's not good. Yeah, that's not good. You're probably gonna be like 40, 50 cents maybe on the peak. If this downtrend holds. Depending on what they're doing, make sure you get out around 40 cents. That's what I would do. I would gauge for like half my bag at 40 cents. This is my opinion. Even just looking at this is not even like, this is just an ass chart, but peak, draw a line. Wherever that lands, take it like a couple cents lower. That's my opinion. Let's see, CCXD, RXD just needs 110 million in liquidity to 10x. Small cap coins for the win. I agree, fully electric, 1000% I agree. You can easily 10x your money on anything that's low. And Radiant does have good tech apparently, so I guess the smart contracts and all this other shit on it. What is the, oh, actually the website's probably somewhere. How do you get to the website? Oh, right here. Radiant. All right, so it's ultra fast, 4,000 transactions per second. Being built on Radiant today's smart contracts, future-proof design, highly scalable. I've honestly never looked at their website until the other day. 21 billion coins. Let's see. Yeah, I mean, they got a lot of shit, man. They got a lot of stuff going on, and I'm hoping they do well. You can hold it on Tangem, which is cool. Links in the pinned comment if you guys are interested in Tangem. But these low cap coins, man, market cap, again, it's only at 11 million. It's really low. It's ranked 1547 on the list of cryptos. 1547 is really high, really high. So, yeah, if it moves, man, you guys could easily make some money on this one. This is a good spec play in my opinion, but again, don't take advice from people on YouTube. All right, listen, I gotta get out of here. You guys are all awesome. I appreciate you for hanging out with me today in this this mushroom kingdom that I'm hanging out in. I gotta get back to daddy duty though. Spend some time with the family. As you can tell, I'm remote. I'll be remote for another few days, so you guys will you'll see me in here a few more times, and maybe Friday we'll go down the slide. Ready? Check this out. What are we doing? It's a slide. There's a slide in here. This is like the crate. They like converted the garage into this like huge playroom, which is pretty neat. My kids like love it. That's cool. Let's see. Gotta flip this around. They got a PS5 here too. I could totally play games, but yeah, I don't know. I don't have time for that shit. All right, guys, listen. Bitcoin, Kaspa, all these coins, they're gonna do fine. Take profits though. Don't be stupid, all right? Hopefully you guys have a good day. I'll catch you guys bright and early tomorrow morning. I'm not sure what time. Actually, you know what? I don't know if I'll be able to stream tomorrow. It really depends. I might not be able to stream tomorrow, but I'll do my best. If I can, I will. If I can't, then maybe we'll do it tomorrow night. But either way, you guys have a good day. I'll catch you soon. Happy Wednesday, and peace out. Later.
Hawks, you don't hawk Tua, we don't talk Tua.